Hello, everybody. I'm back. How do I look? Beautiful, right? How do I look? Amazing. So, yeah, it was an eventful few days up there. You know, I run all the time on the streets of Manhattan in the dark. This has never happened to me. I go up to Ithaca, New York, really up in the country, the rural area, and wham! Fall flat on my face. Anyway, let's talk markets. Let's talk markets. Yesterday, of course, was the conclusion of the two-day Fed meeting. I was driving back to New York, so I didn't have a chance to do this. The thing that struck me, the thing that kind of stuck out, you know, in between all that kind of rosy Goldilocks story that the Fed talked about in its statement, you know, like inflation is low and the economy is slowly growing and the labor market is strong and everything is wonderful and they're going to, you know, go very slowly with their the rate hikes, was that they said they're going to stay very focused on inflation trends, okay? Now, I consider that to be the most telling comment that they made, because if in fact they are going to stay focused on inflation trends, well, then you have to consider the fact that the dollar is crashing, gold is running back up towards its recent highs, you got oil back up above $48, on the way almost to $49, you have copper surging, you have the grain markets have perked up recently. So you have a lot of indications in some of these individual commodity markets in gold and the dollar that inflationary pressures will pick up. So to me, that was the most important comment when they said they're going to stay focused on inflation. And it kind of tells me that they're not on the ball in terms of seeing forward price pressures, all right? They're looking at the data now, which, yeah, we had a lull recently. So that's number one. Number two, the fiscal flows, federal government spending is definitely accelerating, all right? I got tripped up on this because there were two periods this year, one in May and one recently. The one in May and then the one, I guess it was back in... and then there was one in June. I have to look at the chart again, but it's definitely accelerating now. The growth in spending about 1.86% year over year. And that's not a lot because we were about twice that at the same time last year. However, and I sent a chart out to MMT Trader subscribers, it is definitely accelerating. All right, so that is a support for the economy. That is a support for commodity prices, that is negative for the dollar. And by the way, it is also negative for bonds, which I think, to me, treasuries, selling treasuries right now, because the bond market is very, very optimistic. They're taking the Fed at its word. And of course, if the Fed does decide to end its rate hikes or stay pat for a long period of time, then I'm wrong. Then I mean the bond market can, you know, basically stay where it is or move slightly higher. But I am saying the Fed is not seeing it correctly. The data will start to show an increase in inflation, and if they're truthful in their comment about staying focused on that, then you're going to see their outlook shift and the markets will reflect that. Stocks, of course, moving higher as the economy improves with the improved fiscal flows. But again, I think the best hedge is to be short treasuries, all right? And so that to me, it pretty much sums up what I think coming out of the Fed meeting yesterday and what I think kind of looking forward at this point. I want to mention zombie trading. My new service had another great week. Yesterday alone, we made 115 pips, being short the dollar going into that Fed meeting, all right? We made some more money this morning, both early this morning in the euro and then again on the stronger than expected durable goods report. So zombie trading having another fantastic week. If you want to get a 30-day free trial of zombie trading, and I would recommend it because the price is going to go up after this first 30 days. If you are an MMT Trader subscriber, you're going to get a special rate, but please do not go to the website pitbulleconomics.com. Email me and I'll set you up that way. If you are not an MMT Trader subscriber, then I'm offering a $75 a month rate. You get 30 days free. Go to the website pitbulleconomics.com. Click on the tab that says products, and you'll see it there. Get a 30-day free trial of Zombie Trader. And if you decide to stay on, you'll only be charged $75 a month, and you could cancel at any time. It's going to go up to $125 a month starting in August. So just letting everybody know, if you want the lower rate, you got to sign up for the free trial. So remember, and for those of you who are MMT Trader subscribers, email me directly. You get a $70 a month rate. It will never go up. You are locked in at that rate. All right? Have a nice day, everybody. I'm going to go heal some more. I'll see you later. Bye-bye.